Hello friends, welcome to another hands-on market analysis with Python. Let's track the price of airline tickets over the years. Why? Because all of us love planes. It symbolizes vacations, it symbolizes exploring, it symbolizes seeing family, going to conferences, staying at hotels, and simply just enjoying the miracle of flight. But it isn't a cheap business. It's not like, say, Facebook, where you need a lot of servers and a lot of lawyers. Here you need a lot of physical infrastructure. You need space. You need a lot of machinery, huge liability insurance. You have a lot of employees that work with you, a lot of risk that's outside of your control. People can get sick. There's weather issues, the economy, price of fuel, geopolitical issues, legal issues. The list goes on and on. So we know it's really a tough business. Airlines don't always, aren't extremely profitable. And in a post here on Reuters, very recently, actually this was last Monday, Ryanair reported its weakest annual profit in 4 years on Monday and said earnings could fall further as European airlines wage what Chief Executive Michael O'Leary described as attritional fare wars. So when I hear that kind of stuff, the first thing that comes to my mind is what? I want to roll up my sleeves, and dig into airline fare data. This is going to be a very interesting EDA, which for those who don't know, EDA means exploratory data analysis. I'll focus on US data just because I know where to get the data, but this will be able to be replicated with European data as well, because Ryanair is a European company. We're going to look at airline ticket costs. We're going to look at the S&P 500 and the price of fuel. Welcome to the Viral Email Show. My name is Manuel Amunategui. Please sign up to my newsletter. It's right here in the middle of the page. And subscribe to the channel, and please give it some thumbs up. It's always nice to know that people are, appreciating the material. I'm the author of this book called, my latest book actually, The Little Book of Fundamental Indicators, that I will talk about a little bit more at the end of the video. Let's start by getting our data. Remember, the source code is always included in the description. There is a link there, and you can get you'll be able to download the Jupyter Notebook for this walkthrough. So the first data set we need to get is from the source of the data itself, at the United States Department of Transportation, at the Bureau of Transportation Statistics. We're going to be getting a lot of very interesting, transportation related, of course, and airline related data for the U.S. Very interesting stuff. We are going to be getting the one that's called the average domestic airline itinerary fares by origin city, and it's by quarters. So we have to deal basically in the format that it's offered, and it requires a little bit of manual labor. So I'll show you how I did it, but you can also download it directly from the site. It will save you a lot of time. But and of course, in the Jupyter Notebook, all the links to all the data sets, the 3 data sets we need are going to be there. So here, let me show you what I did. It basically has by quarter, by year, and for every airport location, the average ticket price, and that's what we're going to be using, the average fare, and it was also a inflation adjusted. We're not really going to look at, but it could be interesting. We're just going to look at the average fare because the S&P 500, the data we're going to use is not inflation adjusted, nor is the fuel price, the crude oil that we're going to use, is not inflation adjusted. So we're just going to look at non-inflation adjusted data. So what I ended up doing is going through each quarter. As you can see, there's also an annual option. I went from each quarter. I wanted to get as much data, as much granularity as I could. And I started with the first year. It starts in looks like 1993. You go submit. So we have quarter 1, 1993. And if you scroll to the bottom, you'll see there's the national average. And this is the data I scraped. So I basically ran each quarter, 4 quarters per year, going from Q1 to Q4 for 1993 to 2018. And that's what I did. So, you don't have to do this. I've already done it for you, but it's good for you to know where to get the data in case you want to look at other data sets at the Bureau of Transportation, or you want to get when they come out with a Q1 for 2019, which is not available yet. You know where to get it. Okay, that's the first thing. The second data set we're going to get is the classic word that we always get is the S&P 500. So you go to finance.yahoo, and it's caret GSPC. And this is, I love the S&P 500 because it's really the barometer of the economic health of the world. It represents the top companies in the US, and some 30% of the money that they're getting, these companies are international money. So it's not only about the US, but it's also about the world. So it's that one single indicator that can tell you so much. So once you get to the S&P 500, you go to historical data. I hope you can see this. I'm going to scroll up here a bit. Historical data. go, there's a date range here, time period. Select max, get as much data as you can. Done, apply, and download. And that's going to download that file to your local machine. And you want to make sure that all the files are in the same folder where you're running the Jupyter Notebook. And finally, we're going to get we're going to go from the Federal Reserve Bank of St. Louis, has a huge amount of very interesting data. We're going to get the crude oil prices, and simply same deal. Go click Max button here. So you see all the data you can get, hit download, and it's going to give you a few options, and go, of course, with CSV. And we want a CSV whenever possible, and also make sure it's in the same folder as all the others. So you will have 3 data sets. One you'll have to manually do. So I basically took all the data one by one and put it into a Notepad or Sublime, whatever you normally work with, and save that as a CSV. And these 2. Remember, the airfare data you can find on the site. The link is there as well. Okay, so we have all the data we need. We're ready to go. I'm going to start running this stuff. So the first thing we're going to do is I'm going to read in our S&P 500. A few things, if you're new to this video, I cast the date field to an actual date time as an object when it comes out of the raw data. I changed the name from adjusted close to something more that makes more sense, to S&P 500. Keep in mind the data you're going to get from the S&P 500 it is going to have a date field, an open, high, low, close, adjusted close, and volume. We're going to get rid of all of that. We're just going to keep the adjusted close, which represents it's better than the close, because if there's any updates overnight, it's going to be baked in, like some changes in numbers, some stock splits, these kind of things. They're going to adjust it here, and we're going to get the date. That's all. So that's why. And then we're just going to keep these 2 fields, date and adjusted close, and we're going to change the adjusted close, which is hard to know what it means, to S&P 500 value. You could call it S&P 500 close, whatever you want. And I'm also getting the percentage change. Percentage change is a great way of looking at the data. It's instead of looking at the price, which includes the previous history, right? Because that number represents where it is today compared to where it was yesterday. The percentage change is just looking at 2 values, where it was the last time and today. So it doesn't look at it doesn't hold the value, the dollar amount anymore. It's just purely, did it go up? It'll have a positive value. Did it go down? It'll have a negative value. So you're really looking at that single movement, and it's using a scale as a percentage scale. So you can then start comparing different products together, even if they're using completely different dollar amounts. It's a neat way of being able to compare them a little bit better. It's not perfect, but it's a little bit better. Okay, so I tend to do the percentage change on all of them. It's super easy, and with data frame, you simply call, you pass the data series you want, and you just call .pct_change, and it's going to calculate that percentage change for you automatically. I'm going to cut off the date to 1993 because the airline fare data only starts in 1993. So I'm going to cut it off. Otherwise, the S&P 500, I think they allow all the way from like the 1950s. So I'm going to run this data, and we see we're going to run the tail on the data, and we see we have data till the 21st, which is fine. It's just like 2 days, actually yesterday's data, so we're good. So for the U.S. Department of Transportation average fare, this is the data I made myself. It's going to look, this is how I downloaded it from the site. I did this manually. Basically, you'll have the year, whether it was the quarter, 1, 2, 3, 4, the price of the fare, and the price of the inflation adjusted fare. So this is what it looks like. So there's a little bit of work because I want to get it into this. I want to get it into the same format as we had the S&P 500. I need a real date because Matplotlib works with real dates, and I want to have a value and maybe a percentage change. So a little bit of work I have to do here. I simply translate the Q1s to the month value. So if it's Q1, I'm taking the 03, basically March, and so on for all the quarters. Then I'm taking the date, I'm adding the year, the current year, so whatever year we're seeing, in this case 1993, that's fine. Adding the month that I calculated here, so it's going to be 1 of 4 months, and just going with a 30th as a blanket statement like that. I'm not going to worry if it's a 31st or if the month ends on the 31st or the 30th. That's it. Once you run this, I now have a date that looks very similar to what we had here, right? We have the date, the average fare, the inflation adjusted fare, as well as the average fare percentage change. So this one, because we're not going to look at this one here, but it's there just in case you want to play around with it. So let me run all that. Looking good. So now we're going to plot we're gonna create a matplotlib chart, very simple. On the first axis, the first y-axis, we're gonna put the S&P 500, and on the second y-axis, I'm gonna call ax.twinx, basically get the second y-axis going. I'm gonna put the airfare and a title. It's that simple. Let me just plot this. And here we have it. So this is the first thing we can start observing, right, is we see in black, right, we have the average fare, and in blue, we have the S&P 500. Look at it. It's very interesting how the fares seem to kind of run with, the S&P 500. From the market crash of 2000, the markets crashed before, but look at that. The fares kept going up. The market crashed in 2008 to 2010, the Great Recession. It kept going up, right? And you're going to see that when we look at the fuel, it's going to make sense what went on here. But this must have been very tough when everybody was losing their jobs, including I got laid off in this period as well. The cost of the airline was going up in that time. So this is crazy. Keep in mind that here we're doing the national average of the airlines for the U.S. and we're basically averaging it all. So it's a very kind of a rough number, but it still gives us something to work with. So here we're seeing overall, right, nationally, the price of an airline ticket was going up, even though the markets were tanking. So that's very interesting. Another thing that's very interesting is here, this great run from 2010 to today, really, the price of the airfare has gone up, but something happened. Like in 2015, it crashed, right? It's been going down, and here we're saying that the prices are low. So maybe I know the CEO of Ryanair was talking about companies that are so competitive that that they're forcing the prices to be low, and it kind of does show. It does show that they got very competitive, very aggressive here by 2015. Even though the markets were going up, people had presumably some money to spend. The airlines, the price of the tickets had to go down. So this makes this a very, very competitive, very hard to make money in the airline industry. Okay, so that's one thing. Next thing I'm going to do is I'm going to look at the percentage change. I love looking at the percentage change because it really shows you how things are changing over time, and it kind of removes the history, right? You're just looking at everything at a single point in time. So we're going to create two plots. We're going to do, one is going to be the raw percentage change for the airfare, really. So if the airfare went up one day, you'll have a positive number. If it went down, it'll be a small negative number. Just that difference from that last point to this current point, nothing else. We're also going to add an average, a rolling average of the airfare. Let me make this a little easier to read. We're also going to add a rolling average. I like adding a rolling average just to smooth the data a little bit. We don't need to do a lot of moving average because we only have 4 data points, right, per year, so we don't have to make it a big number. But it's going to smooth it a little bit. So the fare, we're going to go in with a red color. The smooth, we're going to go with a black color, and the S&P 500, we're going to go with let's just see. Let me go with a color. We did a red. We did a blue. I'm gonna do this. Let's do this one in black. I'm gonna go with the S&P 500 in black and the rolling average of the airfare in blue. Okay, let's run this. So what do we see here? So we see the S&P 500. This is kind of our historical map of what happened. And I added a few horizontal lines. So the 0 line, right, because the percentage change hovers around 0, right? If it goes up, it's a positive number. If it goes down, it's a negative number. And it doesn't include the history. So it's always going to hover around the 0 line, that's what's really cool about it. It's great to build indicators. And I'm also going to kind of put the peaks. It looks like a 0.05 is the upper peak. Negative 0.05 is a lower peak of this percentage change. So it's always good to see these extremes. And we definitely do see there are extremes on the way down in down markets, right? The 2000 crash, the 2008 crash, same thing. And look at that. This is interesting. We see a downwards peak hitting hard right about, right before 2018, or at the end of 2017, it looks like. So this is a really weird period right here. Everybody was predicting that the markets were going to tank, but we're still going up. We can't really see that, but it looks like the change of the airfares is also peaking upwards, which is very interesting. And to see things a little bit easier, the smooth the rolling average basically of the percentage change of the airfare is in blue here. So this makes things a little easier to see, and it's going to help us kind of map this to the S&P 500. Look at that, how it maps pretty well, right? It goes up, the markets go up, it goes down here, markets go down, it goes up. What's interesting, it keeps going up, and this is that. It seems that really that artificial battle between airlines where everybody's fighting to get a lower fare. As you see, they're forcing the fares down, even though the markets are going up. So I forgot to mention how I do that rolling average. It's super simple. You again take your series and you just call dot rolling, and in it you say your window size. So how much do you want to smooth it? We want to take 5 periods, take the average, and make that 1 period, right? So we're basically taking, we're smoothing 5 periods of the percentage change into 1 period, and that's how you do it by saying, we take 5 periods, a rolling 5 periods, take the mean value, and that's what we see in blue. And that's, I could say, for example, just to show you, I could do a 10, and we're going to smooth that even more. And you see how it's smooth even more, right? The problem is the cost, right? The more you smooth, the less fast the data is. It's slower, right? So you're basically looking at 10 periods, a slowdown of 10 periods, which basically means you are, almost 2 years behind, right? Because we have 4 points per year. So this is kind of what it's looking like. So I want to add in the oil, right? Because the crude oil, which is right here, it's also very important for airlines, and that's one that's such an easy data point to add that might as well add it into it. So that's what we're going to do. So here I'm bringing the crude prices. I'm doing what I did before. I am in this case we have to not only cast a date to a date, we also have to cast the value of the barrel of oil to a numeric, because it comes out as an object in this data set, and I'm also cutting it off, because I think it goes, we get a lot of data, right? It looks like we get some from like 1986. So we're going to cut that off to all, everything starts at 1993 in our case. I'm going to run that, make sure that the data is there. It looks good. And we are going to look at the shape, not bad. Okay, so now this is the final graph we're going to do, because I don't want this video to be too long. We're going to create a chart with 3 y-axes. First one, we're going to put the price of oil. The second one, we're going to put the airfare, and the third, we're going to put the S&P 500. So just remember the colors. Red is oil, airfare is going to be black, and S&P 500 is blue. So let's look at the final chart. This video is getting a little long, but here in blue we have the S&P 500. Typical, right? Market crash 1, market crash 2 over the past 20 years or 30 years, really. We have in black we have the airfare, and in red we have the cost of oil, the fuel, right? So it's very interesting to see how the two, airfare and oil, are so correlated. It goes up, prices can go up. It goes down, prices go down. It goes up. They have to, right? It just shows you that the cost of running an airline, of flying planes, is highly correlated to the price of oil. This is a period that's very interesting because the markets were tanking, like I mentioned, and a lot of people lost their jobs, including myself here. Yet the price of the airline tickets were going up. They had to. It's not because they were mean and they knew that everybody was losing their job. They had to because the price of fuel was spiking. It spiked, this is like the highest we can see over the past 30 years, over 140 a barrel. I think this is oil here. So it just showed they had no other way of doing it. Here, this is interesting how the price of airline tickets was going up, even though way higher than the price of fuel. This is very interesting, right? This doesn't seem very nice to me, but they were following the markets. Obviously, people had more money. It was a serious bull market here. And they went up. And it's interesting that the fuel kind of dropped, but it looks like the tickets did not drop that much, even though, probably because related to the fact that, the markets are still roaring upwards. So, whatever he's saying is true or not, I don't know, but I think this data is very, very, very interesting. I think what was really shocking to me was to see how correlated the price of oil is to your airline tickets. And it's just interesting to see that they both went down, even though the markets are roaring. So this is definitely something I would watch closely. It would make some great, data for some kind of financial indicator. Thanks for watching. I am the author of a few books, including, like I mentioned, this one, the Little Book of Fundamental Indicators, where I share how to, my favorite hands-on market analysis fundamental indicators, things like the S&P 500, unemployment, the VIX, the CPI. Every chapter has a Jupyter notebook where I show you where to get the data and also kind of work these kind of exercises. So you can find my books on Amazon. Simply put my first and last name in any Amazon page, and I have a bunch of books. This one is my latest one is right here, Little Book of Fundamental Indicators. package. If you're a Kindle member, it's free. Otherwise, and I think it's like $2.99 otherwise to buy as a Kindle. And I recommend the Kindle because it's just so easy to see the charts versus the printed book. I like the printed book because I can show it this way. Thanks for watching. Please give the video some thumbs up.